All right, Andrew, we're going to jump to our next topic, and that is going to be the big SPAC issue. SPACs.
Yep.
You know, I don't think anybody
SPAC-licious.
really knew what this word was in the beginning of 2020. You know,
Right.
But all of a sudden, SPACs are just exploding across the scene. Let's talk about your first pick, which is SPCE, obviously Virgin Galactic. Talk to me about where you think this is going.
So obviously to the moon. Well, there's no pun intended on that one. But Virgin Galactic. This is Richard Branson. This is Chamath Palihapitiya. Palihapitiya. I'm not making fun of his name. I really can't pronounce it. Honestly, I can't. So we know who I'm talking about. He's like the SPAC meister or the SPAC father. So this is a company, actually, full disclosure, I personally own this since about $10 or $11, trading in the late high 40s, hit his 50s something recently. What this is to be one of a very small handful of commercial space travel. What's holding back the stock right now is the idea of, well, we need to do a test run. And the last couple have been like, all right, you know what? We got a little issue. We're pushing it back. We got another issue. We're pushing it back. And like many of the other SPACs that we're going to talk about, there's not much in the area of fundamentals. It's all speculation of the future. It's all on an idea or an ideal or some hope for something in the future. Different than a GameStop, by the way, which is we know it's a crap company. It's not going to get any better, okay? These companies are crap companies because they don't have any earnings, right? But they have opportunity and possibly a golden road ahead of them. So space is kind of interesting. All we have to do is wait for the big thing, watch for, you'll be too late if you're watching, but what you want to watch for is when they have that test flight, and two things have to happen. One, they have to fly. Two, it has to land. So those two major issues have to have full safety with a truly human-manned crew in space. Yeah.
Okay, so obviously the last two trailing quarters, they've been losing just gads of cash.
No question.
You know, there's no real, revenue model yet in sight. Right. So we are talking blue sky here for sure. But hey, if you're in on SPACs, a lot of these SPACs are just that. You're looking at the potential of some pretty big, some pretty big
And if
deal.
you're looking at the next frontier, space, there's really nothing out there.
Yeah. For sure. Well, and you're right. I mean, there's only a handful of companies. Obviously, we keep hearing Starlink is potentially going to go IPO. Right. They just deployed their first service offering. That'll be interesting to see how that plays into it. I think there's a lot of upside there for what Elon is doing over. Of course, when you look at
SpaceX,
Tesla and
but you can't separate SpaceX from Tesla and all that, right? Blue Origin, you can't separate Blue Origin at this point from Amazon. So therefore, the only pure play really of this kind of, let's go fly to the moon is, well, space, SPCE.
You think there's any potential that Elon would roll up all the companies under one holding company and just put everything in one bundle?
First, let's not put anything past him. Okay, that's first of all, right? We don't. I mean, who knows? Who knows?
Second of all, unpredictable.
Yeah, really. I don't see how and why. I mean, each one of these is really. Think about the names behind these. You have Jeff Bezos, you have Elon Musk, and Richard Branson. These guys started this and are doing this because, well, they can, and it's like their childhood fantasy, right? Isn't that what this is? Like I'm looking up the stars.
Boys
and all,
with just big toys. Yeah.
It's all it is. It's all it is. I can't imagine if these are working right now as losing propositions that any of them would say, you know what, I want to bring it together with the other guy. It's all about who gets there first.
Yeah, no, what I'm talking about with Elon is bringing SpaceX, Tesla, Starlink, and bringing it all in and just X.com.
Well, they're talking about that now, that SpaceX is now worth $74 billion on its last funding round. So I would think that he's probably going to try to shoo it out and then maybe bring it back. But this way, get some public money in there and get that valuation pump, and this so he could be even richer.
Yeah. Well, many people said the first trillionaire will be somebody who is going after climate change or bettering the planet. Who better but Mr. Musk, of course.
Although,
all right, next.
Can we just say one thing about Mr. Musk? He just bought $1.5 billion. He bought $1.5 billion of Bitcoin, which is now one of the most polluting items on this earth.
What's that? Oh, because
Bitcoin
of the mining. Yes,
it's
mining.
humongous, the energy consumption. By the way, just so the people that out there know, energy is not this little thing you just plug in the wall and magically there's something that pops into your car and charges. It's coal. It's nuclear. It's all sorts of other ways of producing, and much of that is dirty. So let's not fool ourselves.
You know, battery is a big issue right now, and of course, obviously, they're trying to change and solve that problem with what they're trying to do with their new battery innovation. I know we're getting a Tesla. I don't want to go there too much for today on the SPACs, but yes, I know where you're going with that, and I definitely agree. To a certain extent, obviously being a full disclosure EV driver. Let's talk about your next guy, which is LAZR, LAZR. All right, so I really like what, I mean, now you're talking about autonomy. This is, you know, a company that's producing technology just for this purpose. Your thoughts on them?
So they produce the LiDAR instrumentation for use in autonomous driving. There was an announcement just this week on Friday, as a matter of fact, that Apple is doing some research into the area of LiDAR to work with their autonomous cars. Now, it's kind of interesting, this whole fascinating, this Apple announcement cycle has been going on. They were working with Kia. No, they're not. They work with Hyundai. No, they're not. They work with, no, they're not. I don't know exactly. Toyota. No, they're not. So I'm not sure who they're working with, what they're doing. And this whole project that's been kept under wraps for many, many years is starting to kind of percolate a little bit. So, you know, I guess it's all tied in. You know, you'll take your watch, that will be your key. You start it up, you do your thing. You know, maybe you take a big pad, you put it there instead of use the iPad. I don't know, but it's going to be kind of interesting. But you're going to need this LiDAR for use in detection of motion, streets, people, and there are several companies out there that are doing it. But you know, I think Mobileye was another one that was bought up by Intel. That was one of the first ones, right? I don't know if they do LiDAR, if they have a different technology, but nonetheless, it's still in the autonomous driving and the identification. So this is kind of interesting. Again, they still are in the infancy, just like all these other SPACs, special purpose acquisition companies, for those that weren't quite sure. And if you're still not sure, well, nobody else is either. So don't worry about it, what's going on with these things. But this is a back-end way of getting out into the market is the bottom line.
So with LAZR and what they're doing, would you say this being a buy or hold?
No, I would think it's a buy. We own it, disclosing what we own it. I own it personally, own it for our clients, buying on dips, taking off some of the tops. I've been working these things between ranges because that's really the play right now as I see it. So kind of if it rips, you know what, let's take a piece off. We had another one this week that did that. That was just out of control, which was on our list today. We took a piece off the top, fell back down, comes back up. We'll, you know, kind of add to it. If it starts leveling off and holding support, and then we'll take some off the top. You know, there's you can't get wrong getting a double, right?
For sure, yeah, for sure. And if you've got enough of these in the game, you know, I think you're in the right place. Let's get into QS. Now, they, of course, hit a little bit of a road bump with the lawsuit. What are your thoughts on really where they're going?
Earnings this week were
Earnings
this week were great. This is lithium battery. This is all about, again, not unproven, but this is all about a not really out in the public domain yet, but what they are doing is they're creating batteries, longer life batteries, for the hope that obviously there's a lot of car companies are going to need these batteries. That we see that Ford is going full EV by 2023. 650,000 federal vehicles are going to be turned over supposedly to EV. That's a lot of batteries. I mean, a lot of those little double A's that got to be tied together, right? So,
how do you think though that the class action is going to just be a bump in the road for these guys?
Probably. I mean, that's what we see usually. I don't see really a big problem with that. And even if it is, they have enough money on hand to just deal with it. But you saw the earnings, stock was up 30% on their earnings announcement, came up, hit above 71, dipped back down to about 63.5. We took a nice piece off the table on that gigantic bump when I think we pretty much doubled our money in the stock, or close about 80% up in a very short period of time. But I will continue kind of moving back and forth on that because I think that is the play. Like I said, I'm going to say it again. I think some of these you can hold for a while. There's going to be some of them that bust. Some of them are going to see great opportunity on good days in the market when technology is in favor. Some of these are just going to ramp. And then there's going to be those days that they have, 10, 12% days. You're going to be scratching your head saying, oh, you know what do I do with this thing? And then you get out a little bit too early. So small pieces of these could be really a much better play than all-ins.
Yeah, for sure. I like that. On to our next one, which is CCIV, obviously with what is happening with Lucid Motors. This merger most likely is going to happen.
That's the news.
If it does, where do you think this baby goes?
So again, Lucid has never produced a car. It seems that a lot of people
Yep.
like their design. It does look pretty cool to me. The pricing is about in line with Tesla, maybe a little more on some of their cars, but generally speaking, in line with Tesla. Really, what this is different than some of the other companies. It seems to me, at least. Tell me what you think, because I know you're getting a Tesla or whatever, or you drive a Tesla. It looks like direct competition to Tesla to me. Different than other companies,
doubt, yeah.
right? I mean, this is like Tesla, we're going to take you on, versus some of the other companies, like we're making an electric vehicle, which is different.
Yeah. No, they're going after the luxury car market, which is the Model S and the Model X, the Model Y to a certain extent. Definitely head on, but I do agree with you. This company has yet to prove their oats in terms of manufacturing prowess. There's a lot of problems there with this being able to go, but with Churchill kind of jumping into the game with them, I mean, this company could have some legs in terms of cash and at least get one car going. Maybe they could give you an alternative to the Model S, for those EV buyers in the future.
So the problem I have with some of these are, if you think about what this is, right? It's a company that's unproven, that's being backdoored and put into a SPAC through now basically an IPO on the market, grabbing a lot of money. We don't really know what the valuation, everyone seems to have $1 billion valuation right off the bat, right? You and I should do a SPAC just so we can get that $1 billion, it seems to me, that you just put it in there, right? Just let's do the, the Baron Horowitz SPAC show, and then just put it out in the market for $1 billion.
There you go.
You look at a company like Fisker. Now, I don't know about you, but my last recollection of Fisker was they were bankrupt, right?
Yeah, tough automotive, and automotive in general. And I still, I'm pretty much hands down that Tesla wins this race all in. No one's going to catch them. There are going to be some players that get into this game and do a pretty good job. I think GM is probably one of them, especially at the entry car level, with what they've got going on with the Bolt right now, and now the new Bolt EV getting ready to come out. If GM beats them, meaning them being Tesla, beats them to the market with a $25,000 car, and especially if we see the $7,000 tax credit come in, that game I think is over, which puts, and that's crazy to say, because Tesla, if they drop a $25,000 Tesla on the market, it's going to get interesting, if anything.
It's getting interesting, but they don't also have the profitability that GM will, because they don't get the tax credit anymore. So that's a problem.
Well, but they
I'm
could
saying about
for the
Fisker,
first 400,000 cars.
Right.
So they would get it back.
They would, isn't it? I thought it was a lifetime cap on that. Wasn't a lifetime cap?
They'll get another. I think it's 400,000 cars
on the new car,
the new $7,000 credit.
Right.
But even then, I mean, that's still, if you look at their projected sales, I mean, they were at 255,000 units for 2020 here in the U.S., because this is all applying to U.S. models. 255,000, that being mostly Model Y and 3. That is going to accelerate Elon's thinking somewhere in the 350 to 400,000 range in terms of cars in the United States being sold.
Right.
So they're immediately going to gobble up that 7,000 once it rolls into place. So you got Cybertruck rolling out. You've got maybe this, this smaller model. What are they calling it? The Model 2.
I don't know. I've looked at Teslas. I love the S. The other cars, not so much. Now I bet you got to drive. Do you have a deposit on the truck?
Y. I have it. Yes, I do.
I knew you would. I knew you would. I knew it.
Yeah.
I want to ride. I'm calling first ride.
Yeah, you got to drive the Y. I think that's their newest car, which is the one I have, and there's a big difference. But back to my point with Lucid, I think you're right. Lucid is going to struggle in this market, and especially going up against the 800-pound gorilla. Right. Listen, if they were coming in at $25,000 vehicle and trying to go head-to-head with GM, it's more of an even race. Okay, sure, GM might beat them out with the Bolt, but if they come out with something super cool a year later, now I think they have it, because I think that's where the market shakeup is going to be. You need to own. First of all, you need to own the SUV space. Tesla is trying to do that with Y and Cybertruck. And right now, no other EV maker is even close to that, owning that space. If Tesla has it to lose over there. Lucid, not even running, for something of that nature. Out.
So then you got there's one other point which we don't have on our list, which is Workhorse. Workhorse is they make cargo vans. Now, one of the things that probably was disappointing recently was that Amazon went all LNG on their fleet recently. Everybody was expecting maybe there would be something there. Right.
Yeah.
But we do know there's a push forward and there's a contract that's been looming with the post office with Workhorse. And that's interesting, especially if Biden's administration has said, hey, we're flipping everything over. Now, we know how fast government moves, right? If that deal goes through, that could be dramatic for that stock.
Well, that and a few others, that could be in there. But the key there is going to be production and scalability.
Correct.
To be able just to handle. Because you're talking about maybe 50 to 100,000 vehicles that you need like almost immediately to fill something. Right now, I only know one company that can handle that kind of scale.
Who's that?
Tesla.
Well, Tesla or GM, if they have, they could.
Yeah, but getting to.
They don't have it.
Don't have the vehicle. Yeah.
Right.
Yeah.
Right.
Getting to the vehicle. Could and I guess they're close on the Cybertruck platform. Could something happen there? If you really dumb that down, if you look like a Ford F-150 and you pull off all the four-wheel drives and stick it down into a very base vehicle, it's somewhat of a utility car. It's what they rent at Home Depot, So
exactly.
It's doable if you were to take a Cybertruck and just strip it down, especially at a $39,000 price point for what they're trying to promote. If they get that thing near $30,000 for a bare minimum,
that would be something.
Now we got a game,
right?
Which would be interesting, and I think for that market for sure. All right, so SPACs galore. Very interesting stuff happening in the world of stocks right now. We definitely want to pick your brain on this in the future. Any SPAC that you're looking at right now that you would say, this could be a little bit of an early play here?
I mean, the 3D space has been pretty good. So we're seeing that, Desktop Metal. We've seen other companies like Stratasys and 3D do extremely well. That all of a sudden, it's like all of a sudden, by the way. It's like forever it was like, 3D is interesting, it's great. And then everybody's like, nah, not going to happen. We can make little toy soldiers. That's it. Who needs it? Now all of a sudden they're coming into play that, hey, you know what? There is a utility for this. So that's kind of interesting. We talk about the charging companies, right? You got SBE, you got BLNK, you got EV Box. So there is a need you would think about for that as well. So if you combine a couple of things, right? The themes, thematic investing, which is what things are all about right now. It's all about theme. It's not fundamentals. It is not about the company's earnings. It's about themes, about momentum, it's about opportunity, it's about technicals. So when we look at the idea that, okay, we got all these EVs on the road, and assuming that's going to be
you need the infrastructure, sure.
Somebody's got to charge it.
Yeah.
So there's a lot of opportunity in the charging space as well.
That being said, let's jump to them. Charging stocks, SPE, ChargePoint, making some pretty big moves here. If you were looking at this company as a buy or a hold, what would you say?
So SPE, again, it's all about pricing and the technicals right now, in my opinion, but they have SPE is a really good company in terms of they have kind of the lead in the area of charging. They have a lot of infrastructure built in already. Yep. Probably more than I think anybody else, if I'm not mistaken.
Active stations, yep. You can use them pretty much anywhere, yep.
So I think there's an interesting play there. Again, the question is going to be, okay, are we going to utilize those, or are people going to be charging at home? Are we going to have the superchargers / house of the future built in with a couple of plugs for the family? That eventually you may have a situation where you have extension cords going everywhere, right? I mean, you have the daughter, the son, you have all these people that are charging up overnight. Right now it's like one house, maybe with parents and a couple of kids, one EV. That's it.
That's
and the rest
solar
of them
driveway.
Right. Well, that's even better. Right.
You just roll up on it and it just charges it like your iPhone. All right. So SBE.
Yep.
I agree with you with that in the sense that we maybe could it overbuild, but the argument I think would be that really the growth of EV is going to occur in down market, meaning in that $25,000 vehicle, whether it's the Bolt with GM and what they're doing, or other companies that come out with this micro EVs, maybe even for commuter cars. That's where the large portion of the big sales are going to occur. Sure, crossovers and SUVs, big middle market, the luxury market, much different because they're not going to be charging except on long trips. I mean, you're just not going to be the case. They have a charger at home. But for the lower, cost vehicles, those are going to be people who do not have the capacity to charge at home. So
but we also have the other problem that you and I have talked about is that, are you going to pull up to a station right now? You pull up to a station, you wave your card, you throw the gas in because there's no more full service anymore, right? So you do it yourself, and it takes you, I'm going to stretch it, 3 minutes to fill up your car.
No way. It's at least 10 minutes.
What, to fill up? What are you talking about?
To fill up my big,
What do you have?
beast
A
of
Hummer?
a BMW. No, we have a BMW. It's like it's a big SUV, and it takes me 10 minutes. You got to get in there. That's if you can get to the gas line.
Really?
Down here, it's at least one car deep. So one car deep, I got to wait on that person. Not that I don't have to for my EV.
Right.
Don't get me wrong.
Okay, so let's just say, okay.
Don't forget you got to drive there and then drive home.
I'll go with your 10 minutes, but that's all standardized across all of these different scenarios that I'm going to build you, right? I'm talking about the pull up, the plug in, or the dump in.
Sure.
Here's the deal. You hit on it last time really well. We need to have maybe these companies start thinking about either partnering with or more appropriately creating their own. Buc-ee's, you've heard of Buc-ee's?
Oh, yeah.
So Buc-ee's is coming to Florida.
Oh, really? Okay.
Buc-ee's is going to, I think, Orlando. We want them down here. If anybody doesn't know what Buc-ee's is, go Buccee. It's in Texas. They're a gas station, but much more. I mean,
great
probably
product. Kind of like a Wawa.
Wawa with 100 feet display of beef jerky. Seriously, full 100 feet, full 100 feet. Okay, but you need something like that. You need that convenience store behind it to offset the downtimes. Because when you're there charging your EV, it's not going to be 10 minutes, is it?
Nope.
It's going to be a half
depends.
Hour.
I do this all the time. I mostly charge at home, but in moving across, if I go out or I'm going down to Miami, I just jump into a supercharger, and usually it's a top off. And it's usually only if you have that range anxiety, which I do not, because you're dealing with just people. I do it because I just want to see how long it takes me. So if
how long does it take? How long does it take for a top off?
If I go in at 20-30%, I can top off to around my 80% because I won't overcharge the battery. But usually that's less than 15 minutes. You're in, you're out, boom. I'm checking email before I can even answer an email. I'm out of here. So there is some argument in this, and I think it's also time displacement with these charging stations because you're displacing time from other things that you typically were already doing versus in a gas vehicle. Now, I know there's going to be the grab and go kind of scenario. The thing I'm concerned about, especially if Tesla drops a $25,000 vehicle, is they're really going to have to ramp up their, because that's going to go like hotcakes. It may not get to the volume that maybe a GM Bolt would get to, but if it does, now you've got a big problem because you're going to flood the superchargers because people most likely won't have a charger at home. You're going to flood the superchargers with the lower end cars, which is going to piss off the S owners and the X owners big time. For those who, don't forget about that. The volume is going to be interesting to watch. So that potentially makes me think that these potential charging stocks could be a really good play. Let's jump to the next one, and that is TPGY EV Box. They're claiming EV sales hitting 11.2 million units, up from 348% from 2.5 million in 2020. This all by 2030. That's a massive shift in our automotive ecosystem if that were to actually occur. What are your thoughts on that? Do you think that with everything that's happening,
it's that
too far?
Everybody's talking about EVs now. I don't know. Right now, those people that don't have EVs want to try an EV, right? They want to, hey, what's the big thing? What's the delight in this whole experience? I don't know. I mean, I think there's still a place for the old-fashioned,
cars, yeah, they're going to be here for sure.
It's going to be
They're not
here.
disappearing.
Right. So I think there is, I mean, it's like anything else. You get these kind of estimates, and they're all linear. They're all just like, oh, we're going like this, or we're going like that. I don't necessarily know that if these estimates are really going to work, especially because, like I said, let's not forget about the realization is going to come when we start getting that many cars on the road. We're going to have to figure out another power source because right now the coal is a major problem. And even though we don't see it out of the exhaust of a car, or we don't smell it,
you got to generate it.
It's happening. So this whole idea of going green is not just, we can't just do it from a standpoint of virtue signaling. We have to do it for real. We have to do it for real. So I think that there is some possibility of that. I wouldn't necessarily discount that. And that's just US based, right? Is that just US or is that world?
Yeah, I think that was their global EV sales at 11.2 million units.
I don't see that
by 2030.
I don't see that being, no.
Yeah. So that's big. Obviously, that's going to open up a lot of charging units. I mean, if you look at and if the Democrats stay in place and we do see a lot of movement toward, kind of the Green Deal, EV and/or electric, solar, all those kind of aspects are going to really come into play, which I think will be last one here for EV stocks is one of our homegrown guys here, Blink. But this one is definitely on the downturn right now. It's dropped quite a bit here recently. I don't know if it was bad news, good news, what happened to Blink and why are they on a little bit of soft spot?
It's all, we've seen a little bit of softening up of the euphoria that we've seen. The SPAC. Listen, if you have a couple of days, these things down 10%, they look really bad, right? They kind of went up nicely, they rolled down. You're going to see that kind of volatility. Again, Blink second to, I would think, SBE. But Blink has a great name, great opportunity. They're trying to, they're also have a lot more opportunity, I think, to grow with what they're doing. Any of these companies, it's all going to be about the execution and management, and we still don't have really good information about any of those things because a lot of these companies are in their infancy. The whole industry, not only this, the whole thing.
No doubt, yeah.
And don't forget that the old industry, the old gas stations, the old oil companies, the old convenience stores, for that matter, little crappy. Don't forget. Do you remember where we used to get our cars serviced? It used to be the gas station. You'd pull into the gas station, your guy would say, let me check your oil, you're down oil, let me put a little oil in, charge you, whatever it was. We don't do that really anymore. There's not a lot of gas stations that have that multiple garages in there. There's a new paradigm that's being formed right here with all of this, and we really have to wait. The question is going to be who we're going to bet on in this new vision of the future. That's the big issue.
I think we're going to see a C-store jump out in this market and go and take half their properties, convert them to EV chargers, try to take control of what is the future of the market. I mean, you already see it. I mean, right here in Fort Lauderdale, when I look at where the superchargers, they're dropping them. I mean, they're dropping them right in these very unique spots, including one next to a Wawa, which is literally in the same parking lot. I mean, it's Wawa and the supercharger. So I think you're right. Back to your point is that a lot of that is going to roll over. And if that gets there, because there is going to be a transition in our lifetime of seeing combustion engine vehicles start to move out of the marketplace and EV moving in. So these companies definitely going to be interesting to watch. These could be massive monsters in the next 5 years for sure.
I agree.
One question though on Blink, since they are here in Florida, Florida being one of the top EV sales states in the country, infrastructure is needed. Couldn't they do a deal just here to kind of leapfrog everybody?
You would think. I mean, I'm sure that's what they're working on right now. The question that you said is also, where? Is it going to be on the? Is it going to be on the turnpike stops? Is it going to be, at any just either Wawa, Cumberland Farms, or any speedways? Is that going to be the case? Don't forget that again, most of these C stores are profitable because of the C store side of it, not necessarily the gas side of it. So if that's going to be, hey, you know what, that could bring in more. I mean, for that matter, wouldn't it be great? Back in the day, you have to go with me here for 1 second, of that at a movie theater. You have a bank of EV chargers.
You don't need that in a Tesla. Your movie theater's right there.
Okay.
You got Netflix right there.
Right. Okay. All right. So you know what I'm saying? You may have something like that where people are going to be.
You could get a lot larger percentage of people going in and buying something. Because there is a little bit longer wait versus with a gas, most C stores. I'd be interested. I'm going to do some research on this. The next time we talk, we're going to have that. But research on how many units or how many cars go into a C store, leave only purchasing gas and not purchasing anything from the store. Right. Because that's typically what I do. When I used to drive a gas car, I never went in. Now, if I was there for 15 minutes, which the other day I went into a Wawa. I don't think had been in a C store in over a year, and I got a Slim Jim.
There you go.
So you go.
By the way, I wanted to say something about the convenience stores. That's when you say C-store, you're talking about convenience store. I have a convenience store right next to my office, next to a Shell gas station, which is probably the most expensive gas in the area for some reason. But I went in there to buy a couple of things because I was hungry one day. I said, I'm starving. I need something. So I went in there and I bought I think I bought a Diet Coke. This doesn't really work together, but maybe a bag of Doritos or something, whatever. It was like $7. I'm like, how is that $7? I said, look at the price. I said, this Diet Coke is $2.50. I can get this. You know what she says to me? convenience store.
Convenience
That's what she
store.
says to me. It's a convenience store. This is not a market. It's a convenience store. You pay up for the convenience. I'm like, okay, that's what you have. The margins on convenience stores are pretty good.
Yeah, you may have just solved the entire charging industry's, scenario, which is eventually they're going to all be in a convenience store space.
I think so.
And it's just where it's going to be. Andrew, it's always great having you on the show. We always have a blast, and I can't wait for our next one because we're going to have some definite hot stuff to talk about in the next few months for sure.
Thanks so much. Have a great. All right, thanks. Stay warm.
All right. All right, we'll catch you guys all on our next episode here on TechPath. Make sure, and if you have a great idea, shoot it to us at producer@revernetworks.com, or you can pick me up over on Twitter @Paul Barron. We'll catch you next time right here on TechPath.